2026 just started, and is this going to be the year that Bitcoin finally makes it back up towards 100K, or will we have more downside? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 1:15 p.m. Eastern time, and the price of Bitcoin is currently at 88,170. We're gonna start off here with the 12-month chart, and unfortunately we closed last year with a red candle. I was hoping that maybe we could have made it back above 93K so we could close green. That did not happen, so this is looking a little bit bearish. So far we're starting off the year with a green candle, but this doesn't really matter until the end of the year. We take a look at the other time frames. The 3-month chart closed yesterday, red engulfing candle. We're far away from the 21 moving average. That's at 56,377. We're also topping the stochastics. Unless we come back up here, this could start rolling over. On the 2-month chart, this also closed yesterday, red engulfing candle. 21 moving average is at 62,355. You can see here we already started rolling over. We're on the way down. Hopefully we could curve back up and try to make a certain move up. Maybe we could flag out here, but if not, we could get more downside as well. The monthly chart also closed. We closed, I would say, right on the 21 moving average. Currently right now it's at 88,884. I think it was like at 87,600 or 500, something like that. I still kind of see hidden bullish divergence here. This is sloping up from this point to this point, kind of, and from here to here it's sloping down. Maybe that could save us. We're starting to reset on the stochastics. I'm not sure if we might need one more month before we could start rolling back up, but we would have to stay above 88,885 in order to remain bullish. If we break this 21 moving average, we could start heading towards this 50 moving average at $56,807. Now the 3-week chart closes in 3 days and 6 hours. So far we're below the 21 moving average. This is not looking too bullish, but the stochastics look like they want to reset. So what I'm hoping for is if the 3-week could reset and start going up, the 2-week also closes on Sunday. This could start coming up and we could stay above this 50 moving average. And on the weekly, we've been dragging here on the floor for a while, so this is due to start coming up. If we could do that, we can start making a run maybe towards this 50 moving average on the weekly, which is currently at 101,591, at least to test it. Even if we don't get above it, we could get above it and start closing candles above here. I would say the bull market's back on. As long as we stay below this 50 moving average, I would say the bear market's still on. Now remember, this kind of looks like a bear flag here, kind of like a descending triangle. If I put on the patterns, this could break us down pretty much to this point of control here, which is at 67,000 and possibly even lower to about 65K. So we also have to keep that in mind, that that's a possibility. Now, if we take a look at the 3-day chart, we see that the stochastics are getting toppy. This could start rolling over. We are still below the 200 moving average. We closed another candle prior below. These are all wicks, so there's no strength here to get above. This 21 moving average is about to cross downward the 200 moving average. That is bearish. We have to get back above 89,854 if we want to get bullish here on this 3-day chart, and I'm hoping for some type of a double bottom. If not, it looks like we will roll over. Again, this is also a bear flag. On the 2-day chart, stochastics are getting toppy. We could start rolling over. We're still below this 21 moving average. We cannot get above it. This closes in a day and 6 hours. On the daily chart yesterday, once again we closed below the 21 moving average. Stochastics are toppy. This looks like it wants to roll over, and this is where I do have it in a bear flag. As you can see, this is getting very close here, and the candles are following it right here directly. If we make it to the end here, we could possibly drop down. With the stochastics being toppy, this is looking a lot more likely here. Even if we go back up later, but it's kind of looking like a bear flag to me. Now we take a look at the other time frames. A 22-hour time frame, this looks like it wants to roll over. We're still trying to fight to stay above the 21 moving average. 12-hour chart is rolling over as well on the stochastics. The 10-hour chart is the one that kind of looks like we could start rolling back up here. We are above the 21 moving average. I'm seeing a wick here. This closes in an hour and 40 minutes, so that shows that we cannot get above this 80 moving average at 88,716. This could be a little bit bearish here. 8-hour chart, stochastics are low enough that we could start getting back up here, so that's not looking too bad. And on the 4-hour chart, stochastics are low. Maybe we could start coming back up. Now here I'm seeing a head and shoulder pattern. I'm seeing a left shoulder here, the head, and I'm seeing a right shoulder. I feel like if we roll over, this could play out and we could get to 84K. I've been seeing a couple of head and shoulders here and they have not played out. This is one left shoulder head. I would say this is like a right shoulder that didn't play out. I would think that this is also a head and shoulder, left shoulder head. This could have been a right shoulder, didn't play out. So now I'm using this head like a left shoulder head, right right shoulder. Again, resistance on the 200 moving average. Every time we go up here, we get negated and we come back down. There's super resistance on 89K. We cannot get above 89K. I see more downside. Now, a bullish point here is this could also be some type of a double bottom, a W, one bottom, two bottom, and the measure move to this could break us back above like to 92, 93K, 91K around there. So if the stochastics cooperate with us and we start going up with the stochastics our side, this is possible that it could happen, but we would have to close a lot of candles here above this 200 moving average in order for that to happen. If we start getting rejected like we did here, then maybe this head and shoulder pattern will play out. On the 1 hour chart, the stochastics are toppy. We're starting to get a red candle here. This is tweezer tops. If it closes like this in the next 40 minutes, this could make us roll over. And on the 15-minute chart, stochastics are already on the way down. We made it above the 200 moving average. We got wicked down, 2 red candles. Now we're fighting to stay above the 200 moving average at 88,153. If we can't keep above the 200 or this 21 moving average, I probably do expect more downside. This could also turn into some type of head and shoulder pattern where this is the left shoulder, this is the head that we come down, we drag here for a little bit, and then we can roll over. Right now, for the first day of January 2026, I still see us kind of going sideways. Again, we make a move up, there's going to probably be resistance at 89K. We could break through that. Resistance at 90K, we could break through that. There's still ultimate resistance at 94,500 that we have to get above. I still don't expect us to make a major move until sometime next week when everything gets back to normal, everyone's back to work, and the schedule's back to normal. Right now, people are still in holiday mode, so things could still continue to go sideways. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.